Hi, everyone, and welcome to the Get Real Courtney podcast, where we talk about all things real estate, life in Las Vegas, and everything in between. I'm your host and local Las Vegas realtor, Courtney Zubarek, and with me today, I have my friend and one of the best mortgage lenders in town, Stan Leonard. Stan, introduce yourself. Tell us a little bit about your background.
Yeah, so I'm a true Las Vegas native, born and raised in Las Vegas. I love downtown. The Arts District is kind of where I hang out. I get my haircut down there over at Sinister Salon, and just kind of love the businesses down there. And
yeah, love the Art District.
yeah, I'm a product of the of CCSD. Like there are some of us that get through. But,
yeah,
and a loan officer for the last 9 years. So
very nice.
Yeah.
Well, tell us about where you're working now. Tell us about your company.
I work with Merit Lending. We are the largest UWM brokerage, so we're very proud of that. We have a strong relationship with United Wholesale Mortgage. We can get our contracts to close done in 14 days, maybe even a little bit shorter if necessary. We've got other great broker partners as well for some of those more niche buyers.
Perfect. Well, Stan, we've been hearing a lot about interest rates lately. So tell us about it. I know that some buyers who are really thinking about buying right now are a little hesitant towards that, even though it's actually kind of creeping up into a buyer's market. Buyers have a lot of negotiating power right now because sellers and listings are sitting longer. So what will you say to somebody who's on the edge?
Don't wait, because as soon as interest rates go down, everyone else who is on the sidelines are going to enter the arena, and we're talking hundreds of thousands of buyers. And we've got the Jackson Hole Symposium coming up in a couple of days. Big event. It's kind of like the Super Bowl Sunday of central banks, economic forum, all that sort of stuff. And the big takeaway from that is, they went through 11 consecutive interest rate hikes. They're always going to be slower to bring interest rates down. The last time we saw an event like this, interest rates went down 0.5 point from bank to bank, and they did nothing for the consumer. So it was a big fat wash.
Yeah.
So if you are holding out for that to have a significant impact on your approval, if you're already approved, strike while the iron's hot.
Absolutely. And just to piggyback off of that, can you kind of explain what these fluctuating interest rates really do to your monthly payment in practical terms so people can understand what sort of monthly mortgage payment they'd be looking at? Sure.
So when interest rates, fluctuate by, say 1/8 of a point or even 0.5 point, like it's only a little bit of an impact. Like you're talking about, $60 to maybe $150 a month, and so it goes from maybe being a little more comfortable to a little less comfortable, or if it does go past your comfort zone, scaling back a little bit in your purchase price, but not by much, maybe $10,000 or $20,000 just to make up for it, and that's what I would say really to be prepared for. If there's any movement in that Fed rate, it's going to impact your purchasing power by about the same, not a whole lot of money.
Okay. Is there anything that you or your company is doing right now to kind of incentivize buyers? Any special programs, temporary programs even, that are happening at the moment?
Yeah, so Merit Lending, again, we work a lot with United Wholesale Mortgage, and they've got a 1% down. Of course, that's going to be area media driven, so we'll have to make sure that your borrowers are qualified for that. We have a first-time homebuyer program where we can include solar into that purchase.
Wow, okay.
Which is huge. That is huge. Yeah, down payment assistance along with a clean energy program. Great program. And those are not showing any sign of disappearing there. But even if you're not a first-time home buyer, or you for some reason don't qualify for one of those programs, the minimum down on an FHA loan is still only 3.5%. 5% for a conventional loan, or for some first-time home buyers, 3%. So it's really not as much money as you would think.
No, there are a lot of programs that make the down payment and home affordability a lot more attainable than people realize. So that's the good news.
On that clean energy program, I had a colleague of mine close one of those just last month. His buyers came into that contract for $2,300.
Wow. Okay.
Yeah.
Now, as we kind of touched earlier, listings are sitting a little bit longer now in Vegas and all over the country at the moment.
Ask for seller paid closing costs.
Yes.
Big
yes, you are reading my mind.
Now's the time.
Now is the time. Yep. Sellers are giving credits away to buyers. What are some other ways that could potentially assist people with their mortgage? So you got closing costs. Are there any other things that?
Yeah, so it goes back to your contract. You know what a lot of buyers don't realize is, so they have to come up with a down payment, whether that's, on their own, a gift from a relative, down payment assistance, that can't come from the seller. But on an FHA loan, you can get as much as 6% from the seller. So, and 6% is quite a bit of money. You can do quite a bit with it.
Yeah.
You can do your permanent buy downs, or you can do temporary buy downs, which to me, the temporary buy down is where it's at, because that money sits in your escrow account. It gives you a lower monthly payment initially and eases you into what your payment would be based on the interest rate you're locked at.
Great. Now, explain buy downs to somebody who may not really understand what that is.
Sure. So a 2-1 buy down is the most popular option right now. So your interest rate doesn't change, but the money goes into the escrow account. It gets applied to your monthly payment as if for the first year your payment was based on an interest rate 2% lower. That second year, as if your interest rate were 1% lower, and then from then on, your actual monthly payment. Now, the cool thing about that is those funds are held in an escrow account. We are anticipating, this Fed cut. We're not sure what the Fed's going to do over the rest of the year, but if they trend downward in interest rates and it makes sense to refinance, if you do a permanent buy down with points to save maybe a half a point, 0.5% on your interest rate, that money's gone. And that could be tens of thousands of dollars versus the money from it's seller funded. It goes in your escrow account for a temporary buy down. You can apply whatever is left over towards the payoff of your mortgage. It actually reduces your refinance costs.
Oh, that's pretty incredible.
That's pretty awesome.
No, it is. Well, can you go ahead and break down, so you mentioned FHA. What are some other qualifications that people may need? So you mentioned the lower down payment. Can you break down for each mortgage type what qualifications buyers will need to be able to attain those?
Sure. So income, qualifying credit, and basically the ability to repay the loans. That's what your debt to income is. So, and of course, income looks different for each buyer. If you are working as salaried or W-2 position, we're going to want to show a 2-year work history. For all of our buyers, we're going to want to show a 2-year address history. Obviously, if you're using a pension or retirement funds to qualify, we're not going into your work history at that point.
Right.
I also didn't mention, but veterans, the VA loan is tragically underutilized.
Yes.
100% financing on a VA loan. So.
Absolutely. I worked with a VA buyer last year who was able to get a home with a 0 down payment, and he's actually planning on using that again very shortly. So he's actually going to be generating some passive income and renting out his current place as he uses the program to buy another one soon. So
excellent.
It's very, very smart of him, and it's a pretty lucrative opportunity. And it's just great whether or not you plan to buy rental properties. It's perfect. You're just finding your home and your place, and where you're going to.
And well, I think that is because you just hit on something really important. Is in this market where interest rates are in the 7s and in the 6s, and where there is such a stagnation in payments, like people's income increasing. Now is the time to not necessarily look for that final home, right? Get yourself into something that you can afford, that you can grow into.
Yes.
Stay there for a few years, and that as you're continuing to save, as you're continuing in your wealth accumulation, becomes a portfolio, part of your portfolio.
Absolutely.
And generates income just like your veteran buyer. So, don't turn your nose up to a condo or even a manufactured home if you have the foresight to generate income.
Exactly. Dig into the tools at your disposal and find clever ways to really start building a portfolio and making passive income for yourself. And real estate in general is just such a great way to do that.
Oh, it's a great way. And I'll tell you, it all starts with that first home. Like most landlords, they start with their primary purchase and move into the next ones. It's
the flow of things. Yeah. Absolutely. Yeah. Now, give us the deets. So what is something that buyers tend to talk to their lenders about that could potentially hurt them in the qualification process later on?
Oh, what a great question. So I would say that it comes from a place of a lot of times just borrowers being uninformed or having an idea of utilizing something that they're not allowed to. So, for example, if your dad is a veteran and he wants to use his VA loan to buy you a house, well, a VA loan is for the veteran for his primary home only. So that's one of those things where we go, okay, does it kill a deal? No, we just kind of revise how we want to do that purchase, right? So, okay, do we have to come up with a savings plan? Do we have to utilize down payment assistance? Where can we go to make that work? And if dad wants to purchase a home of his own, then we help him with his VA purchase. I hope that answers your question. No,
yeah, it absolutely does. This is really helpful information. Thank you, Stan. Now, I want to circle back to down payment. A lot of buyers are convinced that they need 20% down to put on a home. What's the deal with that?
So, in most cases, 20% down is not required.
Okay.
There are products that do have that barrier of entry, but for your first-time home buyers, again, you can get into a home. We talked earlier about 3.5%, 5% down, 3% down, depending on the borrower. And from an investment standpoint, you'll have some buyers that are more well qualified than others.
Sure, of course.
That do have that 20% down to put down. A lot of times it makes more sense for them to leave that 20% down in their retirement fund or in their bank account, or put it into a wealth building instrument than it does to make the 20% down payment.
Yeah.
If you were to purchase a home with 3% down and you have your mortgage insurance, that becomes cancelable on a conventional loan after 2 years of on-time payments, provided that there's 22% equity in the homes. And it actually, there's a cutoff point even on your amortization schedule. So when you sit down and do the math, a lot of times you'll find that the monthly savings between not paying that mortgage insurance and the amount of that 20% down is just, there's a huge discrepancy, and 9 times out of 10, you're not saving enough money to warrant that big of a down payment.
Yeah.
Circling back to the pandemic too, the first-time homebuyers of that time, they all cited as their biggest regret making too big of a down payment.
Absolutely. No, it's definitely a common misunderstanding amongst most people that aren't in the real estate or the lending industry. So it's really good that you could clear that up for us. What are some other myths that you would just like to clear the air on right now?
Sure. So you hit on the big one, which is you
Yeah.
don't necessarily need a 20% down payment. Again, FHA 3.5% down, conventional 5 or as low as 3. Another big one is that the lowest interest rate isn't always the best interest rate.
Okay, go on.
Well, we were just talking about points and fees. If you're if you're scraping and saving to make your down payment and closing costs, and I show you an interest rate that's a 2% cost on a $400,000 loan amount, that's $8,000. And what if it only saves you, 60, 70 bucks a month? Versus, you have a more attractive interest rate, but the practical one is just a little bit higher, and it costs you far less to obtain. We don't have to have perfect credit. You have to have a qualifying FICO score. If you have negative credit history, we want to have that credit restored. But mortgages aren't just for people with 800 FICOs.
No, absolutely. And I think a lot of people are intimidated to talk to a lender about these things. Maybe they think, oh, I don't have a perfect credit history, or I don't have this much money in the bank that they think they need, so they don't even really get the process started because they're intimidated by it.
And that's a great point. Not talking to your mortgage guy, not getting pre-qualified, looking at a home before you get pre-qualified, falling in love with the home you can't afford. I look at that as like, looking at your car and not talking to a mechanic when it's making noises.
That's a good point.
Our job is to take that, is to take what you've got and go, okay, hey, this is your situation now. If your goal is this home, then this is what needs to happen, with your credit, with your income. These are, do we need to add a borrower, et cetera? Or, are your goals in alignment with what you're trying to purchase?
No, that's a great point.
Yeah.
Absolutely. Well, what are the very first steps somebody should take when they are interested in buying their first home?
Graduate high school and immediately talk to a financial advisor.
Great point. Absolutely.
Yeah. But in all practicality, your first step needs to be to meet with someone who is, who is going to take. And it's not a judgmental point of view. If you don't have qualifying credit, we're not going to judge you. We're going to help cheerlead you and coach you into the right actions, give you a plan, and to help get you. So obviously, me being the loan officer, my job is to say, hey, come to me first. And I can refer you to someone like Courtney, once we do have that approval letter ready for you.
Absolutely. Well, Stan, I appreciate you coming here and talking with me so much. Really, it truly is, like he just said, about getting started, taking action. Don't be intimidated by the process. Nothing is ever coming from a place of judgment, and this is a lot more attainable than most people think that it is. So I am going to go ahead and put Stan's information in the show notes so you can reach out to Stan and his team anytime to get the process started.
Thank you.
Of course, absolutely. And comment any questions that you may have below. We will try to get back to you guys. And make sure to like and subscribe. Get Real Courtney. Stan, do you have any closing statements you'd like to make?
Just the same thing that I say on my Instagram and TikTok. Winners follow Stan Loans Vegas.
Love that. Love that. All right, guys. Well, thank you so much. I'll see you next time.
Thank you.